This is Danny Gould with the Gould team, selling Silicon Valley. Welcome to another Silicon Valley market snapshot for the fourth week now in April. My God, it's almost the end of April. Can you believe it? And I'm a little bit under the weather today, so the nasaliness, but just hold on to your seats, folks, because we have a really interesting subject to discuss today. And really, what I've discussed over, if you've been watching these videos for any period of time, you'll really know that something that I truly believe in is that the market is stabilizing and that it's neutralizing. Okay, and everything up to this point has shown us that that's the case, right? Now, does that mean prices go down? Not necessarily, right? There's always going to be like a peak, right? And there's always peaks and valleys. And if you look at any graph over any period of time, right? Like if you look at these trend graphics reports, which shows the average price per square foot here in Santa Clara County over the last 5 years, I mean, there's always, little peaks and valleys and what have you, but the overall trend is up, right? And as you can see, right, 2018 versus 2019 here at the beginning, significant difference, right? There was a drop off. And so will we ever get back to these prices? Yes. How long is it going to take us to get there? Who knows? Will there be a recession before that happens? Probably, right? Now, oh my God, a recession. Oh no. It's going to be fine, okay? You're going to be okay. And here's why. I was actually reading a really interesting article because, I'm young, right? It's no joke. No joke. It's no secret, right? I am fairly young, but I do study history, right? Because history tends to repeat itself. And so when I studied the past recessions, I noticed that the housing market wasn't really impacted that much. And then I found this amazing article online by Keeping Current Matters, which is a real estate focused website that actually highlighted the impact the last 5 recessions had on the economy. Obviously, the last one, the great housing bust of 2006, 7, 8, 9, whichever year you want to put it in, right? But that 6, 7, 8, 9 era was the cause was the malpractice in lending. So it was the collapse of the housing market that caused the recession in the first place, right? But the previous 4 ones had almost little to no impact on the housing market. I do want to read this article to you real quick. I want you to pay attention to it. And bear with me here. There's some technical difficulties. But this, by the way, if you're interested, I can definitely shoot you the link to this article. It's readily available online. Just type in why an economic slowdown will not crush real estate this time. Keeping Current Matters. According to the National Association for Business Economics, there will be a recession in the next 3 years, right? 10% expected in 2019. We're already halfway through. Okay. 42%, well, a third of the way. 42% say recession will happen in 2020, 25% in 2021. So in the next 2.5 years, we can expect there to be a recession. And this is according to all these, there's all these business journals, all these surveys that are outlined here that are actually tagged that you can read and get more information from. But it says a period of temporary economic decline during which trade, this is what a recession is, right? Which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. And again, right, it speaks to my point. During the last recession, prices fell dramatically because the housing collapse caused the recession, right? If we look at the previous 4 recessions before that, home values weren't negatively impacted. January 1980 to July 1980, home values rose by 4.5%. This is all corroborated by data. This isn't just made up. 1981 to 82, home values rose 1.9%. Home values fell less than 1% in the 1990-1991 recession, and then in the dot-com bubble, which is the most recent one, most recent memory aside from the housing bust, home values rose 4.8%. Now, keep in mind, this is aggregate national data. This is not specific to the Silicon Valley. But we can see there's no reason to panic right now. even if we maybe head for a recession, we might see a cooling of the housing market, but nothing that indicates a crash, right? Housing market is just normalizing. Inventory is starting to increase and home prices are finally stabilizing. This is a good thing for buyers and sellers as we move forward. You know, it's almost like they watch my videos. No, I'm just kidding. But as you can see, right? I mean, look, that's national data. Obviously, in the dot-com bubble, we're in the Silicon Valley, right? And anything tech, whenever the dot-com bubble, right? Of course, Silicon Valley is not going to be impacted favorably. Demand goes way down. People lose their jobs. People lose everything, and they got to sell, and everything goes kaput, right? But don't you get the sense that Silicon Valley is just getting started? I mean, we're sitting here, we're at the epicenter of it all. And I feel like it's only begun, you know? And I think that's what scares people because they don't want to admit it to themselves. They don't want to admit it to themselves. And when you look at our average price per square foot in comparison to a lot of the large metropolitan areas around the globe, Shanghai, Tokyo, New York City, specifically Manhattan, we're not even near that. And here's the cool thing, we have land, right? I mean, not a lot of it, but we have land, right? So people are saying, oh my God, single family home, $1,000 a square foot, $1,500 a square foot, try $3,000-4,000. That's the ceiling. Everything before that is just child's play. And I know that doesn't sound, I know that sounds crazy, but that's just the way it is, right? And so, here's what I have to say to the recession. Bring it on. Bring it on, because I don't believe that a recession is going to equate to a correction in the housing market, especially here in Silicon Valley, where prices are not only supplanted by the limited inventory, but the strong buyer demand. And demand has not waned. People are just being a little bit more selective, taking their time. But the levels of activity that we're seeing in the market are very consistent year over year. And so if you just look at like the pending data and the absorption, in fact, some of that excess inventory in some parts of the county is being absorbed. And we're actually over where we were last year in terms of pending units in some specific areas. So I think one clear takeaway from all of this is that in real estate, if you're a buyer or you're a seller, but you're in the Silicon Valley, you can't lose, right? There might be a better decision, there might be a better time to buy, right? There's always gonna be a better time to buy or a better time to sell, right? Unless you sold like April of last year, in which case, mazel tov, right? But overall, don't let the fear of a recession keep you from doing what you wanna do. These are the facts. There's no opinion here. These are all facts, right? Do with them what you will. Any comments, question, guys, leave them down below. You know who it is. It's Danny Gould with the Gould team selling Silicon Valley, and I will catch you all in the next video.